We have Ravi Shankar Singh joining in from Colliers on this report. Ravi, hi. Thank you very much for taking the time out. Well, there's a 12% rise that we've seen in terms of prices. Can you tell us, Delhi has led from the front, but what are the trends this year? Are you expecting this double-digit rise to continue? And if so, is Delhi again leading, or which are the cities that you are seeing most traction in?
Good afternoon. Thanks for having me. Yes, on an average across the 8 cities, we have seen a 12% rise, and obviously Delhi contributing to the maximum. What gives me a lot of confidence is markets like Bangalore and Pune, where we see a lot of end-use demand coming in and people actually buying properties to live in. Delhi, there were a lot of fence sitters during the COVID time, who have come to the forefront and bought properties between 23 and 24. But there is a big investor base also, which has hit the market, which has seen the surge in the pricing. Okay, so markets like Pune and Bangalore, Hyderabad, gives me more confidence because it's end-use driven.
Okay. All right. Hi, Mr. Singh. Good day and good to see you in. This is Nigel on this side. You know, what's catching everyone's imagination is the NCR market. And that's normally the one that goes up the fastest. But when things get shaky, then it gets into a bit of a tizzy. How are you reading the trends out there? Most friends and family, they say you put your money in that market, you'll make X return, which makes you a little bit worried. How are you seeing the trends out there, and how far is it away from that bubble territory, so to call it?
Nigel, spot on. This has historically been the case with the NCR market. And what I would, urge people to do is don't treat real estate, at least housing, as an investment product. It's a physiological need. And the need has to be driven from end use, not like a financial product. So yes, the investors flock the market when they see the opportunity in this region. But, for sustainable growth, we need to see more end users coming to the forefront.
Okay. All right. But, just on that point where you mentioned that the end user market is what you're probably most bullish on, which includes Bangalore and Pune. Bangalore has risen around 28%. So it's just about followed the Delhi NCR region. It's probably one of the better markets this time. How much was Pune? And are you expecting this kind of increase in pricing to continue for a market such as Bangalore?
If you evaluate both these markets, the ticket size is still pretty affordable. We are talking about between a 75 lakh to 1.5 crore ticket size, which is trading the maximum in these two markets. And, this is driven by the large IT demand in both these cities. So, yes. And even if you evaluate the inventory overhang, it's the lowest in these two cities. So yes, I see a very strong demand going forward in Pune and Bangalore. And the new segment, the ultra luxury segment, that is a different. It's growing at a different trajectory. In both these markets, there is an audience which is aspiring for these super premium products. So that's why we see those 15,000, 16,000 square feet pricing existing. But yeah, bulk of the demand is still around the 75 to 1.5 crore price range. And that is going to drive the market going forward.
Tell us about the trends in the unsold inventory. Where is inventory building up? There are select markets, where you're seeing so much of demand that inventory is getting dried up, which is a good sign for pricing, good sign going ahead. But there'll be a couple of markets where unsold inventory is still building up. So give us your observations on that front.
Delhi has had very few launches this year, but the festive season coming, We see developers launching many more products in this region. Bangalore and Pune, everything is getting absorbed in the price category that I have mentioned. So yes, there is a lot planned for the second half of the year. And, we are expecting this sales momentum to only go up. It is not going to come down in the in the mid segment.
Okay. All right. We're going to leave it on that note. Thanks very much, Mr. Singh, for joining in and speaking with us.